Before I wrap up, we weren't going to get out of today with a few numbers. So there's a couple things I want to hit on in closing, but really want to start with the thank you. Thank you to all the panelists. Thank you to all the work that went into this, the travel to be here and engage. You taking time out of your schedules in order to sit down and spend time, right, to pause. I think you heard it from this last group. Taking that time on your human capital, yourself, your processing, your intellectual capital, understanding, those are the two areas you can control. The financial capital will happen. It has to be managed really well, but it's there for a purpose. It's a tool for that life that you want to live. So thank you for taking the time out to be here. This is all being recorded, so if there's sections that you want back, you will have a follow-up from Haley and Katie. And I do want to thank Haley. I don't know where she's at right now in the back. None of this would have happened without Haley. As we all know, that it takes a team effort, as it does within your organizations, to pull it off. And Haley, fantastic. So thank you. So one of the questions that we do get, because I can't let you out to cocktails and appetizers without a couple numbers here, right? Because a lot of people do say, well, what does life look like afterwards? What do the allocations look like? We talked about the allocations between family, charity, and taxes. The other one comes to financial. This is the Global Family Office Wealth Report. And most people get surprised by this. This is within the ultra high net worth community, broadly defined as 30 million and above. This survey group is really from a couple $100 million to a couple $1 billion in terms of family wealth. And most people are surprised to look at it and say 56% is actually traditional cash stocks and bonds, right? 44% get into alternatives. Even when you look at alternatives, I know you got to squint a little bit. Private equity at 21%, 11% is direct investments. When we talk about direct investments, that is your companies. So over time, a lot of individuals start their companies and they're probably highly levered, right? It's 110% into the business, and the other negative 10% is being in debt to start your business. Over time, most families evolve and allocate and spread that out in multiple different ways, including passion assets, collectibles that come into play, real estate. We tend to see real estate families versus operating company families that come into the mix. But a lot of people just wonder, it's like, wow, I've got this business. I don't know what life looks like afterwards. Well, this is what life can look like. It's not an answer. It's not a prescription. It's descriptive regarding how a lot of the ultra-wealthy families think about broad-based asset allocation. When you look at it from what you do in the business, public markets being on the left, very tight, very efficient in terms of how we approach the public market allocations. When you look at private markets, private equity, venture capital, you heard from a few people up on the stage today, manager access and manager dispersion is a huge issue. Well, if your direct investments are part of your private equity holdings, that means that you, as the manager, are a critical part of how to create value. Because these private equity managers, the venture capitalists, how funds are held, it really comes down to manager dispersion, and we need access to top-tier managers. This is why you go to your business every day. It's why you have your operating meetings with your teams. So how you approach the public markets, how you approach the private markets, and it is another question we get often. Well, John, I can't just sell the company and be in all stocks, cash, and bonds. It's like, we agree, right? We need access to private markets. This is why we've put a couple years into developing our private market platform, which is actually a joint venture between Vivaldi Family Office and First Trust, in access to top-tier managers that if you went direct would be 10, 20, one at 50 million if you tried to go direct with them. And yet our clients are getting access at $100,000 and $250,000 minimums with those managers, as well as co-investments into SpaceX, Anduril, Anthropic, XAI, right? So we can get the co-investments in too. So when you think about your risk management in your portfolio overall, this is why the front end makes sense, the work on yourself and the human intellectual capital coming on the back side of the process, whether you're starting your own next companies, or you're also looking then to how do you continue to take risk to achieve what you want to do for your family, that access is being provided. Now, we will have a survey that comes out to get feedback in terms of, okay, well, how can we improve? How do we get better at thinking about things? So what we'll ask is, we'll send you a book, Strangers in Paradise. Now, Gary that I mentioned earlier that's here, put us in contact with Jim Grubman. I've gone through this book years ago, and I love the metaphor of strangers to paradise. And this particularly applies to first-generation entrepreneurial wealth creators, is that you've immigrated to this land of wealth. Right? The language is different, you don't understand the process, you haven't sold a company before, and they use this metaphor of immigration to think about what a first-gen immigrant and how they engage the world around them versus second-gen versus native-born, and just how that plays itself out. It's a meaningful book because it's really illustrative in the mind of relating to something that gives you some distance from your business. We'll send you a copy of this book as a follow-up to the survey, or if you want one really badly, then let's have an individual conversation. I'll get you a copy of the book and I'll get your feedback directly versus the survey side of it.